Hey, Bulls and Bears, JJ here. Bull, boom, bear, bust. We are back. Yes. What a day. What a day. They finally admitted it. The Fed expects banking crisis to cause a recession this year. This is very unusual. We're going to try to unpack this and figure out why they're actually admitting this. And I think there's a couple big things going on here that we need to be aware of. First of all, please check out my interview that I did with Bob Kudla if you want to learn how to trade and profit in this economy, in this environment. A lot of good stuff in that previous interview. Just check the videos page for this channel, and you'll see the previous video was with Bob Kudla. But let's get into this news here. The Fed. Typically, we do not see the Fed admit, one, that there's a recession until it's already too late, or two, they don't forecast a recession because that would almost be like a self-fulfilling prophecy. When people hear the Fed talking about it, that's more likely to cause an economic downturn because then people will be even more afraid because they think the Fed, are the experts, the economic engineers. But here's what I think's going on that really I don't hear anyone talking about. I think the Fed is tired of being made fun of, right? So if you're an entry level worker and let's say maybe you work at a store or something, maybe let's say a gas station, and you mess up, you forget to clean the bathroom 5 nights in a row, okay? Well, that's understandable. You're an entry level worker. You're probably not getting paid that much. But the people in control of our entire economy, the entire banking sector, wrong time and time and time and time again. I mean, how wrong can these people be? They never lose their job, one. Some people will get replaced, yes, but no one's ever held to account, no matter how wrong they've been. And let's just talk about some recent examples here in the last couple of years. Transitory inflation, wrong. Just a few weeks ago, the banking sector is sound and resilient. That was the vice chair of the Fed. Sound and resilient, right? Trying not to cause a panic. Well, now we've got the Fed admitting this here. I'm just going to put up a CNBC article here real quick. Wow. So this is very, very unusual. So what else would be causing this? Why would they finally come out and admit it? Are they just tired of looking like big dummies? I think that's a big part of it, but maybe there's something bigger and deeper going on here. Maybe they want to cause the economic downturn so they can bring in the new financial system. We already have Fed now rolling out this summer, the new payment system. A lot of people believe that's going to lead to the digital currency. And what they could do is they could allow these thousands of banks to fail, these regional banks, these smaller banks, and they could blame that on bank runs. And then what they could do is they could say, well, now to avoid bank runs, we're going to have this digital currency with more controls on it, and people won't be able to go online and just log into their accounts and take the money out, because that's most of what we saw. It wasn't a lot of people waiting in lines at the banks like you used to see, and well, you still do see in other countries, but you used to see like pictures of the Great Depression, all these people waiting in line, around the block, around the corner, and down the road to get their money out of the bank. We did see some of that this year with SVB, for example, and some other banks, Signature Bank. I think I saw some photos, people waiting outside, but it was mostly, a large majority was people just going online, logging onto their accounts, transferring it out, wiring it out to other banks, to other savings accounts, etc., to other forms of digital money platforms, so to speak. So a lot of different ones we could talk about. But here it is. The Federal Reserve staff gave FOMC members a presentation about potential repercussions from the failure of Silicon Valley Bank and other financial sector institutions. Though Vice Chair Supervisor Mike Barr said the banking sector is sound and resilient, staff economists said the economy is taking a hit. So we have now even people within this institution contradicting each other. So pretty interesting here. Also, we're seeing a split on what people think as far as should we raise the rates even more or should they hold steady. Haven't heard too much talk yet about cutting rates, or people within these institutions amongst themselves. I haven't heard talk about cutting rates, but I've heard many economists and people say that the Fed is very likely to pivot sometime this year. But no mistake, no doubt about it, in my opinion, this economy is going down. And people argue over, what is an economic downturn and what it isn't. Well, to each person, it's different. There's people that made a lot of money from the 2008 financial crisis, people that had cash, they were ready to buy assets when prices dropped. A lot of people became home owners when prices dropped, including I was one of them in 2010. I bought my first house here. Before that, I had an apartment or a condo, but my first detached single family home. So it was a great time for me because even back then I knew that just things didn't make sense. And it wasn't a lot of studying and research like I do now. And I didn't know much about the monetary system or financial uh, information at all. In fact, I didn't even have a college degree back then. Not that a college degree is really helping me that much, with this type of stuff that we talk about. But back then, I just knew it didn't make sense that 2005, 6, 7, 8 homes were just ridiculously priced compared to incomes. And then I started learning about the low interest rates, the loose lending, the adjustable rate mortgages, the no money down and no document loans, the liar loans. I mean, all the shenanigans that they did to pump the housing market back, to pump up back then. It's even pumped up even higher now in different ways. The banks have been unleashed now and had been able to loan out money like they never used to be able to do because they don't have to have any money in reserves now. So that's one thing that's a lot different and a lot worse than 2008. When people compare now to 2008, they say, no, it's not as bad as 2008. The loans aren't as ridiculous. Well, not the exact type of loans, but other things are even worse now. Interest rates are even lower now for a longer extended period of time than that previous housing bubble and the previous financial crisis that ensued. And the lending has been much more loose now, not necessarily adjustable rate mortgages or as much subprime as back then, but the banks don't have to have any money in reserves now. It was different back then. Even looser lending when you look at that aspect of it here. So that's why I think the bank failures coming up here are going to be even worse than we saw back then. And I think the ones we've seen so far here in 2023 are just the tip of the iceberg. Let's get into some other news, some things that also tell us, that things are headed down the wrong direction here, the wrong path for this economy. An apartment owner in Houston foreclosed 3,200 units foreclosed, multifamily structure foreclosed. Tip of the iceberg. We're going to see a lot more of this. About a lot of investors went out, and obviously this wasn't a small time investor. Anyone that can afford buildings totaling 3,200 units, apartment units, it's not a small fry investor by any means. So will we see the big investors, the big institutions, the hedge funds, etc., the Blackstones? Will we see these big companies see financial turmoil coming up here in the very near future? It's starting to look like that. We're going to have to keep an eye on it and see how this plays out. And I don't think anybody knows what type of bailouts could happen behind the scenes, but this particular landlord, over 3,000 units so far, according to the source I have here, says no rescue package for that particular landlord. So will it be like the banks where certain investors or hedge funds, institutions will get rescued and others won't, right? If they're deemed systemically important, like they said, they came out with the banks and they said if they're systemically important, if they could cause contagion by failing, then we're going to rescue those banks. But the smaller banks, the regional banks, they don't matter. Will it be the same with these mega investors? We'll have to see how it plays out. Please let me know what you think down in the comments. America imported almost $79 billion, billion with a B, in cell phones and other household goods from China in 2022. Folks, we don't manufacture enough here. There's going to be a point where China and other countries are going to be tired of our dollars that we can just create out of thin air in infinite amounts. In fact, they're already getting tired. That's why they're trading outside of the dollar. Plus, a lot of these countries see how we weaponize the dollar, how we go against the countries that do what we don't like by sanctioning them, by kicking them out of the SWIFT payment system, for example. Of course, we've seen that here just in the past year. We've seen that. So these imports, and we're so heavily dependent on imports, especially from China. Of course, most people know that. But what's it going to be like once the dollar is dethroned And the United States being so heavily reliant on imports, what kind of country is this going to be? Because they could really raise the prices on these goods, especially when the dollar starts burning and starts collapsing even faster. Here's another one, obvious sign here. Illinois trucking company shuts down suddenly, leaves drivers stranded. So here are these people, drivers driving one day, and they wake up the next day, and their company shut down. And not only is the company shut down, they got notified via text here. Also, they didn't get their last paychecks. They're stuck out on the road in a hotel that was supposed to have been paid for. They found out that the hotel wasn't actually going to get paid for. I guess they were supposed to get reimbursed here out of this article here. Freight waves. Team drivers of Chromex Inc. Via Park, Illinois say things were looking bleak after they were stranded in a Chicago area hotel for 3 days, more than 1,000 miles from home, without a paycheck or a truck until a truckers outreach organization offered to pay for their rental car expenses to get them back home to Jacksonville, Florida. So we're going to see more stories like this. Again, tip of the iceberg. I know I've been saying that a lot this video, but this thing's just getting started. The layoffs. People just think that these are just one-offs or not a common thing now. But there's a reason why layoffs are already 5 times higher this year than they were in 2022, because this economic collapse is picking up steam, and it's going to get a lot worse before it gets better. Another one here. Morgan Stanley is out there saying that commercial real estate is headed for a crisis worse than 2008. Morgan Stanley saying that. And remember back in February, we had PIMCO defaulted on like 7 office buildings. They had adjustable rate mortgages. The crazy mortgages, adjustable rate mortgages, are still around, not as bad as 2008. But when you look at the commercial sector, a lot of these companies had adjustable mortgages here, and now they're predicting the obvious. I mean, we said that this was coming years ago, and now we're seeing the Fed coming out and saying it, banks coming out giving warnings, saying it. But on the other hand, I don't think they want to be too alarmist. They don't want to sound too convinced that there's going to be the economic downturn, because then that will make it happen even faster, because people will hear that, and then that would be, again, that self-fulfilling prophecy, because so many people trust in these institutions, the big banks. Of course, they're going to try to make things sound a lot better than they really are, but you're not buying it. I'm not buying it. We're going to be ahead of the curve. We're going to be on top of this. Thanks everybody for watching. I'm going to wrap this up. What do you think about the truck drivers stranded? The Fed admitting the obvious. Is there something bigger behind the scenes, or other motives behind that? Please let me know. The $79 billion in imports, what's it going to be when the dollar is crushed? And the 3,000 plus unit apartment building foreclosed. A lot more of that headed here, and commercial real estate headed for a crisis. Morgan Stanley saying it. Folks, it's all coming down. It's all happening. I think we're going to be fine, because we knew this was coming a long time ago. Thanks everybody for watching, and I really appreciate your support. We'll hope to see you here next time. Don't forget that video that we did with the interview with Bob Kudla. Link down below in the description here. Go and watch that. A lot of good investment advice here. Where to put your money, how to profit from this coming. He calls it an inflationary depression. Inflationary depression. Go watch that video, please. Thanks everybody for being here. Big love. Peace.